Joining me now is Andy Walden, Intercontinental Exchange resident expert, the VP of Enterprise Research. Andy, always great to have you. And after we saw that 0.5 percentage point cut last week by the Fed, where does that leave mortgage rates?
And really, a lot of the movement in mortgage rates actually came, as it usually does, in anticipation of what the Fed was about to do. So throughout August and September, we saw a full 0.5% decline in mortgage rates. They got all the way into the low 6% range leading into that Fed rate decision. They've trended modestly higher over the last couple of days as the market has digested what that means and what's to come here. But as of yesterday, we're sitting at 6.14% according to our ICE 30-year conforming fixed rate index. So some of the best mortgage rates that we've seen over the last 18 months plus out there in the market.
Andy, we are awaiting those remarks in the boardroom by Citizens Financial Group. But before we get to that, I want to ask you if we have any sort of indication as to where rates might be heading from here based on ICE's data.
Yeah, it's a great question. And one of the best places to look there on the ICE side is into our futures index, right? That ICE 30-year fixed rate future of where mortgage rates are expected to be. Great way for lenders to hedge their pipelines out there in the market. Great way for folks like us to kind of understand what's priced into the market right now as well. And when you translate that index into what that means for 30-year mortgage rates, they say, by March of next year in the high 5% range, 5 7/8 is where they're trending right now. So based on that outlook, low 6s right now trend, and we start to see some interest rates in the high 5s, maybe late this year, early next year, and then in the 5 7/8 range by the time we get ready for the 2025 spring home buying season.
What does this mean for home buyers?
It's a great question, right? There's two different ways to look at this. One is for existing homeowners and what that means for refinance potential. The other is for potential home buyers and what this means for home affordability. For folks that have taken out their mortgages recently over the last couple of years, 2 out of 5 of those folks that have recently taken out mortgages are now in the money for a refinance, right? This is kind of what they've been waiting for since they took those mortgages out. The average high credit quality borrower there could save about $300 a month from their existing mortgage payment. And so you're seeing 3 times the refinance incentive that we saw a couple of months ago out there in the market, and more refinance incentive than we've seen really since the Fed started pushing rates higher in 2022. Now, when you look at the home affordability landscape, we've kind of snuck into some stronger levels of affordability there as well. In fact, the housing market, the most affordable that it's been since February 2023. You compare shopping out there today to where we were kind of in May in the heat of the home buying season this year, you could save about 10% or about $240 less in terms of monthly mortgage payments to buy that average priced home today compared to back where we were in May. So a little bit of increased incentive for folks to go out there and shop, and you're seeing demand kind of creep up a little bit as interest rates have come down as well.
Andy, we so appreciate it. Andy Walden, VP of Enterprise Research, joining us from Intercontinental Exchange. Of course, as we focus on interest rates, we did see the Fed cut interest rates by 0.5 percentage point last week. We anticipate another 0.5 percentage point rate cut before year end.